Good evening everybody, welcome back to a Chart Nerd technical analysis video. Today we will be discussing Dimitra, the ticker is DMTR, against the USDT on the weekly time frame. I have posted some updates in the past where I said we've got this ascending level of support, which in the last couple of weeks, so on the 8th of July, we found support on this ascending trend line on the weekly time frame, which each time in the past we've come down to, we've had relief from. So right now we are seeing relief over the past week or two, but there's a very key level of resistance above right now, and a key indicator, this 20 EMA, this yellow line right here. When you're above this EMA and you're holding it as support, it's good and you're looking for continuation to the upside. Once you start coming down and hitting your head on this EMA and losing it and meeting it as resistance, this isn't normally a good sign. So over the last couple of weeks, we've been under this resistance and we're sort of caught between a rock and a hard place. So we're holding this ascending support, but we're also being rejected and held underneath this 20 EMA. So we're sort of being compressed into a corner here where we've got this descending channel that since this high we've been in, and we're at this resistance points once more right this second. We're at this resistance and equally the 20 EMA. So we've got two key focal points right here that are saying this is going to be a very tough area to break through. But at the same time, we have this ascending support since January of 23. So we're literally caught between a rock and a hard place. We're in this corrective pattern off of this impulsive move. We're in this corrective descending channel back down to a key level of support, but we're also caught between resistance. So we are literally in an apex right now. We're literally coming up and squeezing here, getting compressed, looking for a break. Now, if you're on the sidelines, again, I think it would just be a smart idea to wait for the confirmation of either loss of support, so either losing this ascending support that we've been holding, or either breaking the resistance. Now again, this 20 EMA is a real bummer and a hard one to get through. Once you start losing it and you start hitting your head on it, you can see here that we was playing around, hit our head on it for a few weeks, failed to break back above it in June last year, and then through July into August we had this correction, and it wasn't until October of 23 where this correction actually ended. So right now, are we going to see something similar where we actually lose this ascending level of support and keep coming back down as we're being rejected from this 20-week EMA? It's a tricky one right now. It is a tricky one. And for a lot of you that are probably watching, you'd say, well, what about this Adam and Eve bottom pattern that I was speaking about previously? This is still valid. It's still in play. Until, I know that right now it would seem really bad if we lost this support, but until we start coming down and losing these previous lows, we're in bullish structure. If this corrects lower and loses this descending support, we're still in bullish territory until we start losing these lows. So right now we could come back down for a higher level of support and then look to load this ship up and off we go. Where would my targets be? So from this local high back down to this low, which we've rallied from since October, I think that if we do come back any sort of lower over the next few weeks or into August, then potentially we've got this larger channel here which we could find support on at 0.0618 and 0.0440. So you can see we're literally caught between this channel. We're hitting our heads on the 20 EMA, running into this resistance. Next target for me is 0.0618. Failing to hold that, then we come back to 440, which I've said in the previous video is also this previous level of resistance we was under for a few months before breaking out. So there is some logic to this. I'm sorry I've been so zoomed out. That's a lot better. So going from this high back down to this low, okay, you've got the 050, which we haven't actually tapped yet. 0.0618. That would be my next point of contact, failing to tackle above this resistance and this EMA. And at that point, if we do come down here and hit relief again, I would expect to drop. I think 0.044 is optimal opportunity. I really do, because once we came up to these highs and we broke this resistance level, we haven't actually back tested it since. So this is still my target right now. And I think August, September historically in returns for Bitcoin aren't generally too great. We do need to be cautious of our alts, especially that, yes, they're in this bullish formational pattern that, you know, eventually I think will bottom out somewhere and reverse to the upside. But at the moment, is it finished? And for altcoins, I do believe that running into their weekly 20 EMAs and failing to break above it whilst in this downward trend and running into the resistance of this trend, You know, the trend is your friend until the end. So unless we start seeing DMTR breaking above this channel and starting to march back onto this high, right now I do believe we've got these targets inbound, which would still classify, hear me out, it would still classify as a higher low along this journey with higher highs. So you've got a low, a high, a higher low, a higher high. This would still be a higher low before a higher high. Now remember, the more you charge up the batteries and pull back here, guys, the larger the spring. The larger the spring, the more you're caught under this and you're being dragged into this corner. Just like this previous dip here, look, we were squished into this corner, really compressed down, hovered around for a couple of weeks and then just exploded. Doing the same thing here, we're getting really compressed into a corner, hover around and look for the explosion and the continuation of this trend. So that's it for me on this, guys. It's a quick update today. I just wanted to make the 20-week EMA the focal point. The fact that we are running into this descending resistance very closely, equally the 20-week EMA. Could this be the indicator that we're looking for these targets to put in that higher low structure before going off later into the latter part of this year? I hope you enjoyed the content, guys. From Chart Nerd TA, take care, peace out.